Welcome to my weekly market roundup, 16th January 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my live trading and the same systems I'll use in today's session as well. That was the last slide of my presentation. Let's start with the global markets, starting with Australian Market Index AXJO. That is continuing to move sideways. It is near the upper edge of the range, so we are not going to buy it. It has a trend line support. We are not going to short it. Friday's candle shape is bearish. It is inside the range, and the weekly is also showing the same indecision. No trade in Australian market index right now. Japanese market index topics. Topics created a bearish shape candle in the weekly chart, and on Friday price created a kind of reversal candle with a bear release signal. It is still in an uptrend, still above the upper boundary level. We are going to avoid taking long or short trades right now. Next is Chinese market index CSI 300. CSI 300 displayed a bearish headwind possible reversal signal on Wednesday, and then for 2 days price came down. On Friday it has an indecisive shape candle, and the weekly candle is also indecisive. It is in an uptrend above upper boundary. On Thursday it had a bearish pressure down day, but Friday it has an indecisive shape candle. In any case, there is no Q trade setup in CSI 300, neither in the long direction nor in the short direction. Next is UK market index Footsie. This displayed a bearish headwind in the weekly chart. Price is still in an uptrend near the trend line support in daily. Friday's candle shape is indecisive. It is in an uptrend, but there is no trade setup. Last global market that we study is Nifty 50 India market. This was the strongest of the global markets, and that is still continuing. However, this also displayed a bearish headwind signal in the weekly chart at the very top. Still in an uptrend. Looking at the bearish headwind in the weekly, I will pause buying new positions in the India market. It is above the upper boundary. That is another reason not to take a new long position. It is in an uptrend. There is no short trade setup. Therefore, there is no question of taking any short trade. There was bearish pressure on Friday. If we look back, interestingly, though price is going up, 1, 2, 3, 4. The 4 previous pressure days were all bearish pressure days. The previous bullish pressure day was here long time ago. That was near the end of September. Since then, though price is going up very strongly, you may say, but there was no bullish pressure day. There is a bearish pressure day on Friday, however, that doesn't change the trend. The trend is still in an uptrend and there is no reversal short setup as well. All the global markets are continuing to be bullish and the USA market is also the same. As we saw in the Wednesday's webinar also, there were several bearish headwinds in global markets as well as USA markets, and that is true this week also, at least for the global markets. And let's look at the USA market now. For that, I am going to use Q Elite, switching from Q Global to Q Elite, starting with S&P 500 index SPY. This has displayed a bearish headwind in the weekly chart. That is a reason for caution, though the uptrend is continuing. Unless this trend line support is broken, the trend will not change. Incidentally, there was another trend line somewhere here that has been broken now. However, there is another trend line support that has to be broken for the uptrend to be at risk. In any case, looking at the bearish headwind in SPY, I would be cautious. And if we look at the S&P 500 futures ES, this also displayed the bearish headwind in weekly chart. However, this came earlier, right from Monday morning session. And since then, I have been cautious. I have booked profit in many of my long positions and protected profit in the remaining long positions. And I also took some speculative short positions. If you see, the backdrop color in weekly has turned bearish. Of course, the uptrend is still continuing. Same as in SPY. Unless this second trend line is broken, the uptrend is not at risk. One trend line has been broken. Now, one thing to notice, on Friday, there is a lower tail. That seems to suggest that at the end of the day, near the close, price recovered. However, that is not entirely true. If we look at the intraday fine-tune chart for ES, this is ES. It actually closed near the low of the day. Why that is not showing on the daily chart? Because the daily chart may be taking the price move until the regular session close, and there is few more minutes of trading in the futures after regular trading hours, and during that period price fell further. That is why, though the daily is showing, again if I come back to daily, let me put the intraday chart here on the left hand side. On the left hand side, it's Q fine-tune chart. You can see price actually closed very close to the low of the day, which may not be evident from the daily chart lower candle. Also, if you see, the closing price here is 3762.25, but the last traded price is 3746.25. So it came down from 3762.25 to 3746.25 after the regular market hour. So it closed weaker than the daily is showing. That is clearer from the fine-tune chart. In any case, it is still in an uptrend, but I am cautious now, extra cautious. Let's get back to the weekly daily template. Let's look at the other market ETFs, QQQ. Here we had successive bearish headwinds in the daily chart, After that, price is struggling to go up. Unless these trend lines are broken in daily, we are not going to think that the uptrend is at risk. Reason for caution because of the bearish headwind, but still the uptrend is intact. If we look at DIA, interestingly, DIA also has displayed a bearish headwind in the weekly chart. Daily uptrend is continuing, but so many bearish headwinds coming in different instruments at the same time is a reason for extra caution. Iwm Russell 2000, this is still the strongest of the 4 market ETFs. It has an upper tail on Friday, upper tail in the weekly chart, and indices shape candle with upper and lower tails on Friday. Friday had very high volume. Still the uptrend is continuing. If I am going to short any of the market ETFs, IWM will not be the one because it is the strongest. Market ETFs are strong. There is reason for caution again for the bearish headwinds, but let's look at the market internals. Let's look at the mega cap top 20 first. Mega cap top 20 is still remaining range bound, but gradually coming down very slowly, and the relative performance is continuing to sharply tilt lower, showing clearly that this is not the time to buy mega cap stocks. It is continuing to be range bound. Now if we look at the, let's look at the major market indices, and I tweeted about it earlier. Here we are looking at the Dow Jones Industrials, Nasdaq 100, S&P 1500 and S&P 500 major indices. New high low, bullish, no bearishness. If you see advanced decline, there is some weakness, but not, I cannot say that is bearishness. There is some weakness in only S&P 1500 advanced decline. The others are still remaining bullish. Up down volume for S&P 1500 seems to be rolling over. Same for S&P 500. You may say for Nasdaq and Dow Jones also. Overall, we still have to say that market internals seen through new high low, advanced decline, up down volume are bullish. One thing I mentioned on Twitter is that 50-day MA percentage, that is percentage of stocks above 50-day MA, that is rolling over for Dow Jones, for Nasdaq, for S&P 500, and to some extent in S&P 1500 also. That is showing some weakness, that the percentage of stocks above 50-day moving average is rolling over. Percentage of stocks where 50-day MA above 200 MA still not rolling over, and the same is true for 200-day MA. That is expected. 200 MA is supposed to be below 50-day MA when the market is so bullish, so it will roll over the 50 MA calculation first, and that is happening. Overall, still we have to say that the market breadth is bullish. There is not enough sign of weakness to say that it is bearish. And if we look at the market breadth total view, this is very important study because no market drop has happened without distribution count being 2 or more. But there is no distribution count at the right edge, neither for the weekly chart and nor for the daily chart. In this total view, I have added the moving average calculations, and this is total view calculation, not from a particular index like Nasdaq, NYSE Composite or the major indices. This is total view, and the total view is also showing that percentage of stocks above 50 MA is rolling over. Both weekly and daily rolled over came below the white line. The other moving average percentage calculations are still remaining bullish. Overall, we have to say that market breadth total view is also bullish. Let's now drill down from the market level to sector industry stock level using this very useful 1 day to 1 month, 1 day to 1 month, sector advanced decline, industry advanced decline, and stock advanced decline. We can see over 1 month everything is bullish. In all Q systems, green or cyan is bullish. Over 1 month everything is bullish. Over 10 day is also so. Over 5 day also more bullish than bearish. Over 2 day, that is Thursday, Friday, we have to say over 2 day it is balanced to slightly bullish. If we look at sectors, it is bullish. Industry and stocks are balanced. That is over Thursday, Friday, and on Friday it became weaker. So only 1 day period is showing weakness. That is not enough to say that market is bearish. Just 1 day is showing weakness, but that is a reason for caution because there are many bearish headwinds in multiple market symbols. Let's look at the finder picture. The weekly picture is not bullish now. It is balanced. Overall balanced. Strength signals also we have to say balanced. Trend continuation signals also balanced between bears and bulls. Only reversal signals are bearish. We can see the breakdown. There are many bearish headwind reversal signals and also box reversal signals. If you remember, in the last webinar also I looked at some of the stocks displaying weekly bearish headwind. If you kept an eye on them, then you might be able to short some of the stocks right when on the daily chart it gave a proper trade setup. The actual Q swing trade signals come from the daily chart. Weekly we have to say is overall balanced. Let's look at Friday's signal. Friday is clearly bearish. Whether we look at all signals, 80% bearish, strength signals 94% bearish, trend continuation 76%, and even reversal signal 64% bearish. Finder is showing weakness. If you try to look for short trades some time ago, it would have been difficult. Long trades were plenty. However, on this Friday, if you try to look for Q360-degree short setup, that is technical setup in fundamentally weak stocks, in weak industries, you would have found plenty of trade setups like that. That is also a reason for caution, and I have taken some short trades already. The advantage of using Q systems and techniques, they come together, is that the signals techniques are largely unambiguous. So I don't have to, or you don't have to second guess. When the short setups came, I took it. I will look at some of those stocks, but before that, let me explain an options trade that I took on intraday basis. That was a very fast trade, and I think that was using Q charts and techniques very effectively. Now options can be risky, and I don't suggest trading naked options, you may learn it first. Options Industry Council has risk information on trading options. Having said that, let's look at this trade that I took. On Friday, a very fast defined risk, and importantly, fire and forget. Take the trade, place the exit trade also as GTC order, and then forget it. This was using options and I took it on QQQ. Why? I will explain that. I opened it with a vertical for 60 cents credit, $0.6, and closed it within 1 hour with 50% of max profit. Q guideline is as a standard practice for many traders, Q or otherwise. If we are trading a spread, like I did in this case, the profit target is 50% of max profit. So once I took the trade for 60 cents credit, immediately I placed the GTC order at 50% of max profit. And within 1 hour, the trade was closed. These are the opening and closing positions. I opened the trade at 2 p.m. All my times are in New York time, Eastern Standard Time. I opened the trade at 2 p.m. for 60 cents credit. I immediately placed the GTC order, which was filled at 255 for 30 cents debit. That is at 50% of max profit. Why did I take the trade? Firstly, let's look at the Q Elite market breadth insight. This is one workspace that I keep on one of my monitors during trading hours. Here I have QQQ, or sometimes you may look at Nasdaq futures also, NQ. On the right hand side is SPY, or you could use ES. Then I have the Nasdaq tick, NYSE tick, volume at the lower panel, and some of the Q band indicators. On the left hand side I have advanced decline and up down volume for Nasdaq, and right hand side advanced decline, up down volume for NYSE. On Friday, soon after market open, I mentioned that after many days, all the 10 indications from this study were bearish. 1, 2, 3, 4, 5, 6, 7. In the morning session, volume was down, 8, 9, and 10. All the 10 indications that we can study from this single Q Elite market breadth intraday study, all the 10 indications were negative, bearish, right after market open, and all indications, all 10 of these being bearish, has not happened for many days. So I was looking for a bearish trend. QQQ was relatively weaker, so it dropped sharply, then it recovered. Where did it stop? It stopped right at the early range low, displayed a bear release signal, another indecisive shape candle, and the next candle, the traffic light color, turned red, bearish. I was going to short NQ or QQQ in this case using options, not SPY. Where was price at that time? Slightly above 313. So I was expecting from here price to come to 313 or maybe slightly below that also. Now this is not at the end of the market close. This is when I exited the trade. So see, when I entered the trade, price was somewhere here. What did I do? I took a spread trade. What was the spread? Sell 313 call, buy 314 call. When was the expiry? On Friday itself. By setting it in that way, I needed just a little bit down move to reach 50% of max profit. And you can see after I took the trade, it didn't go up at all. The traffic light color remained bearish all throughout. And I had my GTC profit taking order, which was hit at this time. Now, if you look at NQ, the futures, I think it has dropped more, but that is fine. I took it as a fire and forget trade, and for spread trades anyway, Q guideline is to book profit at 50% of max profit. So I entered the trade with what I will say with excellent discipline and exited the trade with equally excellent discipline. This kind of spread trades work very well when the signals are all in your favor. And this was an intraday trade. This was on ETF, so I didn't have to look at fundamentals or industry strength. That was a very profitable trade. Another reason I took the trade is when I set up the trade, I saw the reward risk ratio was very attractive, and this is the risk profile from TestyWorks. My maximum possible profit was $60 on one lot, and my maximum loss was $40. So the reward risk was attractive in terms of options pricing also. What does it mean? That means I selected the option legs where implied volatility was in my favor. And of course, using Q fine tune intraday market risk studies, the technicals were also in my favor. So everything was in my favor. Overall market was bearish. I could see that in real time from Q edge also. So everything was in my favor, and I executed the trade excellently. If you keep on taking trades like that, the expected return over hundreds of trades is almost guaranteed to be positive. You may try different techniques out, different trades out using the Q systems in this way. Now, this was not the only spread trade that I took. I shared a trading idea in the last weekly market roundup. Let's look at that. That was a long trade, by the way. At that time, I suggested this as a possible breakout candidate. That was on Beyond Meat. Let's look for the setup. Let's look at the chart. What did I press? Okay. Now my last weekend market roundup was on this day. At that time, I was looking for trading opportunities, and I shared BYND in that live session, and I mentioned on Monday if price could break out of the trendline resistance, that would give a breakout trade. It indeed broke out on Monday, and right near the open I took a spread trade, long call vertical. When I take a spread trade like this, I may buy the leg near or at the money, and I may short the leg near the next resistance. That simplifies my spread selection. I don't look at this and that and volatility all the time. This was how I set up the trade, and I took an expiry after earnings. Beyond Meat's earnings is not out yet, and because it created a false downside breakout in weekly daily, and then it was starting to go up with bullish pressure, bull release signal in weekly daily, I decided to take a long position, and I wanted to give myself some time, so I bought the expiry, that is after earnings. However, this was a spread trade, so I was going to book profit at 50% of max profit, and I expected that to be achieved by the time the short leg, that is the trendline resistance is hit. Let's look at Beyond Meat today. On the daily, I'm going to change the template to see the historical trend lines, and you can see in 2 days it hit the trend line resistance. That was my profit target. However, this was a spread trade, so my profit target was 50% of max profit, and that also exited on the same day. If I had taken it using stocks, then also my profit would be hit on the same day and I would exit the position. So this was a breakout trade I took with spreads, call option spread. However, you could take it using stocks as well. Today, let me discuss one more option trade that I took. I didn't share it in the post, but let me see. Did I save a snapshot or not? I didn't share it on Twitter. And you will see how beautifully you may be able to use options when you have confidence on the trade itself. No, I don't seem to have a snapshot, but let's look at the trade. That was on JP Morgan. And I'll explain exactly how I decided to take the trade. JP Morgan's earnings was out on Friday. You can see from the daily candle, price closed lower with a massive gap down open. And I noticed it was reversing from the very long-term watermark resistance in the weekly, a level where bearish headwinds had come earlier that led to a massive price drop. So some selling might be still there at this price level. People who sold heavily there, some of them may be again willing to sell there. That is the basis of the box short trade setup. Now I was not waiting for the box setup to be confirmed. In this case, I took a trade using intraday fine-tune chart. I was thinking that I could book partial profit and close enough lots. I took an options trade. No, I had to close full position in this case. This was not using long put, short call. So I thought that it may confirm a box setup, but I took the trade using fine-tune chart, and this is how I took it. Let me change the interval to 5 minutes in the fine-tune chart. In the morning, it opened with a massive gap down. This was the opening price on Friday. This was the closing price on Thursday. So it was a massive gap down, and sharply it shoot up in the first 10 minutes. 5 minutes, very long candle. Next 5 minutes, bullish candle, but not so long. Right after that, it created a topping candle with a very long upper tail. That was followed by an indecisive shape candle, indecisive color, yellow color. Where did it stop? Right at the early range high. Price was at what level at that time? Let's see, 140.6. So what I did, I shorted a call. I don't remember, either 140 or 141. I shorted the call, the closest expiry, and I set the profit target again, 50% of max profit, and price came down. When it hit the opening price pivot, this blue line you may not be able to see on your monitor, the opening price pivot blue line, my GTC order was hit. So I closed this short call position with 50% of max profit. Now this was not a fire and forget trade because it was a short call. It was not defined risk trade, so I had to watch the stock. I didn't want to place a stop based on stock's price move, because options may stop me out and price may fall down. So if you are trading options, you may not place the stop based on stock's price. So I could not place a stop just above day's high. I watched the price move. It didn't go up. When it hit 50% of max profit, I closed the trade. This is different from the QQQ option spread trade, because that was a fire and forget. Once I took the spread, that was defined risk. Reward risk was very much in my favor. I just placed the GTC exit order and I could forget that. But this was a short call trade, very fast also intraday trade, and I could book 50% of max profit in couple of hours. These were 3 option trades I wanted to discuss: Beyond Meat, JP and QQQ. Now let's spend some time on the stocks. I mentioned that there are probably many shorting opportunities today. Why the screen is looking like that? Let me minimize and open again. Okay, now everything is filling properly. Now I mentioned there are several shorting opportunities. I talked about CRWD during market hours. Let's look at that first. So why I am looking at the post first? Because you will see how you are able to apply the system during market hours. You don't have to always take a trade after market close next day. In fact, I often take trades during market hours. You know that. This is one stock I shared on Friday at 2:27 p.m. New York time, CRWD. And I saw that the industry was zigzagging. I am trying to change the color, not able to do that. From positive to negative to positive to negative. Relatively, the score was up on Friday when I shared it. However, in itself, the industry was down by 0.5%. So that allowed me to short. Relatively, it was not the weakest, but it was a down industry. Market was down overall. And I found this stock, CRWD, it was gradually coming down, overvalued stock. Earnings growth is positive. CRWD, CrowdStrike, is a well-known growth stock. However, it was overvalued, so that allowed me to short it using Q techniques. And I looked at the charts. I mentioned the weekly chart is creating a topping candle after moving sideways for 3 weeks. This week it created a candle with upper tail. Daily displayed bearish headwind. It created a false upside breakout at the watermark resistance. Traffic light color turned red. When I shared it, it still didn't break the trend line support in daily. So I mentioned if the trend line support is broken, then one may be cautious. Could you take a short trade when the bearish headwind came? I wouldn't do that using daily chart because the trend line support was nearby. The memory trend line supports work pretty well, so I would have waited for the trend line to be broken. So I was waiting for that during the day before market close, 2:30, say, let's say 2:30 or so. I shared this snapshot, and let's look at CRWD. At market close, it has closed below the trend line support. So it came as a breakout short candidate. If you are using Q Elite sonar or radar on TradeStation, then you could have found it before market close itself. It has a breakout at pendulum or price extreme high. That is an attractive place to short. So I took a short trade in CRWD. Let's check the earnings date. I noticed the earnings date. I shared it also. Earnings is on 17th March. Here 17th March. So earnings is not nearby. I took a short trade. In this case I used put vertical, and put vertical was useful. Why? Volatility was in my favor. Though the market is closed now, the option spread may not show the correct price, but I'm hoping that the volatility skew will still be shown properly. Let's check out CRWD. The Q guideline is usually to go for 30 to 45 days. So I, in this case, selected 34 days to expiry, 19th February expiry. I might have bought the in the money, that is 210, sorry, 220 put, and then go out of the money when I get half of the credit. So now I think the prices are not shown correctly. I might have bought the 220 put, sold the 200 put during market hours. That might have given me attractive reward risk ratio. But why I came here is to show the implied volatility. The 210, let me, this should be my long put leg, this should be my short put leg. My long put leg volatility is 55, short put leg is also 55. I think now it is showing different data. When I took the trade, the out of the money put leg was higher volatility. Usually that is true. If you are trading put options on stocks, out of the money put options are usually more expensive. They are having higher implied volatility. That was true for this case also. In other words, if you are trading spreads, put spreads inherently has an advantage because the long put tends to be almost always lower volatility than the short put. That was the case when I took the trade. Now after market hours, the options change doesn't always show the correct data. That is how and why I took a short position in CRWD and I used long put vertical, long leg in the money, short leg out of the money. How did I choose the short leg? A leg where I get half of the premium I pay for the long leg. And I have already placed my GTC order to book profit at 50% of max profit. Now let's look at some other stocks that I didn't share in the forum, but let's do a live market analysis. In fact, let me put these stocks on the full radar first. CRWD I already showed it had a breakout trade, and let's look at the other stocks, sort them alphabetically. AA, Alcoa, BA, how nice, AA and BA. BA for Boeing, LUV for Southwest Airlines, WFC for Wells Fargo. AA is giving a breakout trade setup. LUV is also giving a breakout trade setup. LUV is also giving a possible box setup, possible go with flow short setup. WFC, Wells Fargo, is giving bearish headwind, possible box short, possible go with flow short. And Boeing is giving a possible go with flow short setup. Alcoa not only had a breakout, it had a possible go with flow short setup also. This is what I meant when I told that if you were looking for short trades using Q360 techniques on Friday, you would find plenty. which was not true in recent days or weeks. That is also a reason for concern. And not only that, on Friday I took several short trades. I might have taken short trades in several of them. Let's look at the 360 degrees analysis. Let's start with Alcoa, and I will look at their fundamental, industry, and also technicals. Technical signals and setups I already showed. I look at the charts also. Alcoa, aluminum industry. Let's check out the industry. And I'm using Q Edge, Q Vital, Q Elite, and maybe I will use Q Global also. This Alcoa. Let's check out the industry. Okay, aluminum industry. The score is instantly showing that it is weakening, and the pace is showing that it is decelerating as well. The pace columns at the right edge. So the industry allows us to short. If we look at the stocks, Alcoa, earnings growth is negative. Valuation is in the middle. So the earnings growth allows me to short. So this was a weak industry with poor earnings growth stock. Let's look at the stocks charts. Alcoa, not this one. Alcoa. See the signals on technical charts. It gave a bearish headwind in the weekly chart, created a false upside breakout. It tried to go above the watermark resistance and reversed. Traffic light candle color turned, not traffic light in the weekly backdrop color turned bearish. Traffic light in daily also turned bearish. It has a breakout setup. Bearish pressure as well. So it could be taken as a breakout setup at price extreme high when the weekly is displaying a bearish headwind and weekly is reversing from long-term watermark resistance. Many bearish signals, and again short setups at pendulum or price extreme high are very lucrative short setups. So I have taken a short trade in Alcoa also. Incidentally, the stocks I am sharing, they have liquid options. So I might have taken all of them using put spreads. Either long put spreads or long put vertical or short call vertical. Don't remember exactly what, but Alcoa has very liquid options. It could be traded with stocks, it could be traded with options also. That was Alcoa, a 360-degree short setup. Now let's look at Boeing. Let's check the fundamentals. Aerospace and defense industry. Again, Q edge instantly shows the industry is weak and it is decelerating as well. Industry allows me to short. Fundamentals showing it is overvalued with negative earnings growth. So both in terms of valuation, both in terms of earnings growth, I am allowed to short. If I look at the stock Boeing, here the weekly backdrop color is bearish. Weekly candle shape is also bearish. Daily is in a downtrend. It has trendline resistance, and on Friday again we have a bearish flow candle. That is technically giving a go with flow short setup, and in this case price is falling both below white and yellow direction line as well. Incidentally, if you see the bearish headwinds here could catch the very top. After that it fell moved sideways, but in a downtrend in a way you may say, because only trend line resistance is there. There is no trend line support. That shows it is still in a downtrend. And then we have a magenta flow candle. That is a go with flow short setup. Stop could be just above the recent high, and profit could be booked once the distance is covered. Boeing has liquid option, so I might have taken it using long put verticals. Next one, Boeing is creating aeroplanes. Let's look at airlines, LUV. Airlines, let's check the industry. Weak instantly, again you can see relatively it is very weak industry, decelerating as well. This stock is overvalued with negative earnings growth. Fundamentally very weak, industry is weak, decelerating. Let's look at the stock. Daily broke below trendline support with bearish pressure, with bear release signal, with bearish flow at a watermark resistance. Reversed right from watermark resistance after creating a topping tail candle. On Friday broke below trendline support. Weekly also reversed right from trendline resistance with a topping tail bearish candle. Backdrop color turned bearish. Also displayed a bear release signal in weekly. This could be taken as a breakout setup. Yes, there is a trendline support nearby. However, looking at the weekly daily, in this case I decided to take a short trade. In fact, if you were watching LUV during market hours, you could short right when it was breaking below the trend line support, and your short trade, I might have taken again with verticals, would be in sizable profit by the end of the day. So LUV airlines stock is also looking weak. Let's look at a banking stock now. Wells Fargo, WFC. Let's check the industry strength or weakness. Instantly, again you can see diversified banks industry is relatively very weak and it is decelerating also. Let's check the fundamentals. Overvalued stock with earnings growth negative. You see the beauty and power of the Q technique, 360-degree technique, is you are able to find stocks where everything is weak. I know there are traders who just based on technicals, but these examples one after another show that you don't have to settle only for weak technicals or only for weak fundamentals, only for weak industry. You can find plenty of trades where everything is weak and short them, and when the market was looking bullish, you could find stocks where everything is bullish and buy them. WFC fundamentals weak, industry weak. Let's check the stock technical charts. The weekly has bearish shape and neutral color. This week price dropped with very high volume. Daily has displayed a bearish headwind signal and it has displayed bearish flow, bearish pressure, bear release, extreme high volume. If you apply the checklist conditions for headwind short setup, all those checklist conditions are met. So WFC has a bearish flow, but it also has a headwind reversal trade setup. That came in Sonar also. It had a possible box setup also. So all these four stocks, WFC, BAAA, LUV, all of them are giving 360-degree short trade setup. CRWD, CrowdStrike also gave a 360-degree short trade setup. There are plenty of shorting opportunities now, and the opportunities that I shared, they are at a relatively higher price, so they will be pretty lucrative. I took it as defined risk verticals, and I think it will turn out to be all right. I don't need all of the trades to be profitable, just some of them to be profitable, and I think it will happen like that. But I will see. I am okay to take some loss in some trades, no issue with that. As the market is looking like ready to roll over, and I find bearish trades very easily. I'm not finding bullish trades right now. Let's see what the market does. If the market goes up again, then I will be bullish again. But for now, I found bearish trades more easily, and I didn't want to take bullish trades under such circumstances. Still, I have to say that if we look at the technical charts of the market ETFs, market futures, if I didn't have the bearish headwind signal in Q systems, then I would not be so much cautious. But I do have the bearish headwind signal. You do also have that. That signal has come in not only USA market ETFs, several of them. It has also come in multiple global market indices. That is why I am more comfortable, little bit more comfortable taking short trades than probably I would be if I didn't have the advantage of the headwind reversal signal. And in any case, again, I could find 360-degree short trades where I could align industry weakness, fundamental weakness, technical weakness. Those trades are not easy to be stopped out. We are at the 1 hour point. Let's end today's session. By the way, for the Q market view total market breadth total view, I mentioned there was some issue with Metastock's Fire, the aggregator. I wrote to them and they have been able to reproduce the issue. Now they have to get the developer to fix it. They, just like any other software firm, are not able to give a timeline, but as soon as they fix it, I will roll out the latest market breadth studies to the people who are already having Q market breadth. I don't know when it will happen, but as soon as I have it from Metastock, I'll roll it out. And if I see distribution days on the total view, I will share it on Twitter. I know you are not able to have it on your computers right now, but if I observe distribution count of more than 2, I'll certainly share it on Twitter. Thanks a lot for joining me in today's session. I look forward to seeing you in our next session that will be most likely on Wednesday, 8 a.m. Eastern Standard Time. This is a long holiday for the USA people. Monday is also holiday. Have a great weekend, long weekend. Keep safe and trade profitably. Thank you once again.